Hi, everyone, and welcome to the Euro-Pacific Market Updates blog. Today, we're diving into the latest Consumer Price Index, or CPI, release and what it means for inflation, the markets, and Federal Reserve policy. Let's get started. The November CPI numbers are in, and they provide a clear snapshot of the persistent inflation challenges facing the economy. Headline CPI rose at an annualized pace of 3% over the last 3 months, marking a 7-month high. Core CPI, which excludes the more volatile food and energy components, came in at 3.6% on the same 3-month basis. This reflects strong inflationary pressures across key areas like shelter and services, although we did see a slight deceleration in shelter costs compared to prior months. What this tells us is that inflation remains sticky and elevated. While it hasn't reaccelerated dramatically, it's still well above the Federal Reserve's 2% target. Importantly, it's unlikely that we'll see inflation return to that level without a significant economic slowdown, possibly even a recession. Now, let's talk about what this means for the Fed. Based on today's CPI report, the Fed doesn't appear likely to deviate from its current dovish stance anytime soon. They seem content to gradually guide policy rates back toward neutral, which means we shouldn't expect any major shifts until at least the middle of next year. That's good news for the markets in the short term, as the risk of tighter monetary policy derailing growth looks like a concern for later in 2025 than right now. In addition, these inflationary pressures and the potential for tighter monetary policy, we also need to be mindful of the risks posed by a stronger dollar. With U.S. interest rates likely to remain relatively higher than those of other major economies, the dollar could continue to strengthen. And at the same time, our trade partners may devaluate their currency in response to tariffs, compounding this dynamic. These trends could pose additional challenges to global liquidity and asset markets as we move through 2025. All of this underscores the importance of keeping close tabs on economic developments and maintaining a diversified investment strategy. Well, that's it for today's Euro-Pacific Market Update. Thanks for tuning in. Don't forget to subscribe to stay informed on the latest developments in markets, inflation, and global economics. See you next time.